I absolutely love traveling. I personally think it's one of the most fun things that you can do in life. But if you're going to travel for business, you need to know how to deduct your travel expenses the right way. Today, I'm going to explain to you exactly how to deduct your travel expenses without triggering an IRS audit. Without further ado, let's dive in. Let's talk about who is actually eligible to deduct business travel expenses, because not just anyone can do this. For the most part, the only people who are allowed to deduct business travel expenses are business owners who travel for business for legitimate business purposes. Sorry for those of you guys that thought you're just going to be able to set up an LLC and travel. It's not that easy. Code section 162A says that a business owner can deduct expenses that are ordinary, necessary, and reasonable to their pursuit of business income. So if you're someone who owns a business and has to travel for various business purposes, then there's a very good chance you'll be able to deduct your business travel if done correctly. If you're a W-2 employee, I'm sorry, you'll most likely not be able to deduct your business travel expenses. This deduction is primarily reserved for business owners with very, very few exceptions. This wasn't always the case. In fact, before the Tax Cuts and Jobs Act of 2017, W-2 employees were able to deduct travel expenses under a strict set of rules. However, this is no longer the case. So, what are the rules for deducting business travel expenses, you might be asking? Now that we've gone over the qualifications of who's eligible to deduct business travel, we should know the rules now, so that way we can start taking our money and making it work for us. If you're a business owner, then in order to deduct business travel expenses, the travel must be primarily for business, away from your tax home, which is the city or general area of your place of business. And it must be long enough to require sleep or rest. Now, when I say it requires sleep or rest, I'm not talking about your boss giving you a 15-minute break and you go take a nap in your car. I mean, you have to actually travel somewhere away from your tax home. And your traveling justifies resting. Now, this sounds extremely straightforward, but you would be surprised how many people get in trouble with this and screw this up with the IRS on their business travel expenses every single year. What kind of business travel expenses can be deducted? When you're traveling for business, there are a wide variety of expenses that you may incur during the course of your trip. But here are some examples of business travel expenses that you might be able to deduct on your tax returns. Transportation. This includes airfare, trains, rental cars, Ubers, or mileage you're using of your own vehicle. Lodging, such as hotels, motels, or Airbnbs. Meals, generally 50% deductible. Tips related to travel. Baggage and shipping. Of work materials. Internet and phone charges related to business. Dry cleaning or laundry during the trip. So if you go on a legitimate business trip and if you incur some of these expenses I just mentioned, then yes, they'll most likely be able to be write-offs for you on your tax return. But what percentage of the trip has to be for business? Obviously, the IRS doesn't expect you to be doing business 24 hours a day when you're on a business trip. However, in order to be able to write off the business trip expenses, the IRS does require that the trip be primarily for business, as I mentioned earlier. The IRS has clarified in multiple rulings that the primary purpose of the trip must be business related, not personal leisure or vacation. Really what this means is that you should only try to write off business travel if there was a bona fide business intent justified for the trip before you left. For example, if you have a real estate business and if you need to go look at some properties and meet with developers on site in another state, this could be a legitimate reason for a business trip. Reasons that could justify a business trip include meeting clients, attending conferences, performing work-related tasks. Weekends, holidays, and standby travel days may still count towards your business trip if they fall between business work days. For example, if you work Monday through Friday and stay the weekend to resume business Monday, the weekend can still be considered part of your business travel. Now, some people really try to push the limit here. For example, they may try to write off business expenses for a 10-day trip to Florida when they only did business one day of this trip and spent the rest of the time at Disney World and Universal Studios with your kids. I would highly discourage you from trying to play maneuvers like this on your tax returns. Don't make the trip far longer than necessary. If the IRS suspects that the primary purpose of your business trip was not for business intent, then it may try to cancel those deductions and disallow them. This could cause your tax bill to be a lot higher than what you expected to be, plus you have to pay penalties and interest fees. If your intentions were honest and you had poor documentation or lack of clear purpose, the IRS can also audit you and disallow your expenses. So you have to keep detailed records. Keeping detailed records for business travel is essential for tax compliance and financial accuracy. The IRS requires clear documentation to prove that your travel expenses are legitimate and directly related to your business activities. In the event of an audit, Insufficient records could lead to the denial of deductions, even if your expenses were valid. The IRS does not care that you have your business transactions all on your business bank statements. You should keep a dedicated travel log of digital records that tracks the purpose of each business day and the activities performed. By maintaining organized receipts, itineraries, and notes about your business meetings or purposes ensures your deductions are substantiated. Accurate record keeping also helps separate personal expenses from business ones, which is essential when you're a business owner. When trips involve both work and leisure, clear documentation of travel dates, business-related activities, and meetings makes it easier to determine which days are expenses that are deductible. This prevents you from mistakenly deducting non-eligible costs and reducing your risk of IRS penalties. It also helps you file your taxes accurately. This helps you avoid underpayments or overpayments. Plus, beyond taxes, keeping thorough travel records can benefit you in a number of situations. If you reimburse employees or if you're self-employed, having receipts and logs ensures fair and compliant reimbursements. These records also help you track spending trends, plan future travel budgets, assess the return on investments of your business trips. But in short, good record keeping is not just about tax compliance. It's also a tool for better decision making. It provides you with insight into where your money goes and helps with long-term financial planning. Now, let's go over a tax court case. Here's a recent tax court case that illustrates the importance of properly documenting your business travel expenses. In the 2023 tax court, Thomas Lerone Mitchell versus Commissioner, the court disallowed Mr. Mitchell's claimed business travel deductions due to insufficient and unreliable documentation. Mr. Mitchell, who reported income as a business consultant on a Schedule C, attempted to deduct his car, truck, and travel expenses. However, the IRS and the tax court found that he failed to meet the strict substantiation requirements outlined in Section 274D of the tax code, which mandates clear and detailed records of the amount, time, place, and business purpose and relationship for each expense. Mr. Mitchell's mileage log contained inconsistencies, such as conflicting odometer readings and locations that indicated he was in two places at once. Plus, his hotel's receipts were found to be altered and not credible. Ultimately, the court ruled that Mr. Mitchell's evidence lacked credibility and they did not meet the necessary standards for substantiating business travel. This case demonstrates the importance of maintaining accurate records and having an accurate travel log, accurate receipts, and a travel itinerary to support any deductions for business-related travel expenses. If you're ever unsure whether something qualifies, it's wise to consult a CPA or a tax professional familiar with IRS standards and case law. Now, are your spouse's travel expenses deductible? Here's where it gets a little tricky because many people, myself included, we frequently bring our spouses on our business trips. After all, traveling is a lot more fun when you get to bring your partner with you. When taking a business trip with your spouse, the IRS has specific rules about what can and what cannot be deducted. Your spouse's travel expenses are only deductible if they have a legitimate business purpose on the trip. This means your spouse must be an actual employee of your business and must perform essential business-related duties while traveling. Simply accompanying you for a company retreat or helping informally does not qualify their expenses for a deduction. The rules should be clearly documented and supported with job descriptions, pay records, evidence of duties performed during the trip. If your spouse meets the criteria and is actively working in a necessary role such as assisting with presentations, managing logistics, being your assistant, you can deduct their travel-related expenses too, their transportation, their lodging, their meals. And these deductions must be clearly supported with documentation that proves your spouse and their role was directly tied to the business purpose of the trip. Even if your spouse does not qualify for deductions, your own business-related expenses can still be written off, provided the trip is primarily for business. However, shared costs like hotel rooms must be apportioned. You can only deduct the portion that would apply to you alone had you traveled without your spouse. My wife is an employee of my company, Tax Alchemy. When she comes with me on a business trip, she performs valuable and necessary work for the business. She's working 24/7. That is why we were able to deduct her business travel expenses on most occasions. If you have a business and if you love to travel, then consider making your spouse an employee of your business. It's not that hard to do. You can also add them onto your board of advisors. That way you can travel together for business trips and write off both of your business expenses. But just remember, if your spouse is going to join you or your business trips, there must be a legitimate and necessary business purpose for her or him to accompany you on the trip. Documentation is key, and treating your spouse like a true team member, not just a travel companion, will help ensure you stay on the right side of the tax code. Now, just a quick heads up before we wrap up, our Tax-Free Wealth Challenge is happening August 4th through August 8th. It is an online event where I teach successful business owners how to use advanced tax strategies to legally and dramatically reduce their tax bills. If you're making at least $500,000 annually, this is for you. Check the description to sign up below. That's all I got for today's video. As always, I just want to say thank you so much for being a listener. If you liked what you listened to, go ahead and subscribe to the channel. It helps us grow, and share this video with one person who you feel like is growing their wealth today. Thank you so much for watching, and I look forward to seeing you on the next video.